Hey, Wealth Warriors. Welcome to Women of Wealth. I am your Gen X host, Holly Woods Gray.
I'm your millennial host, Allie Ramo.
Today, we're going to be talking about what do you know about life insurance and which policy is best for you.
This is going to be everyone's favorite topic.
For sure. Because in our example, we're going to use our umbrellas. So, our umbrellas is a coverage. We talk about life insurance under umbrellas sometimes. In this particular case, it's going to be for term insurance and permanent insurance. What do you know about term insurance, Allie?
Sounds like it's for, a specific term for
Yeah,
10 years, 15 years, 20 years, 30 years.
exactly. So in this example, this is for a pretty much a man or a woman who's 50 years old. It would cost about $100 a month to get $350,000 worth of coverage. But the question isn't how old you are right now. It's how old are you going to be in 21 years? Because that's when the life insurance costs will continue to go up. The older and older we get, the more it costs to have life insurance. And the reason why is because typically as you get older, what happens? Your health goes down. Yeah. And so you might not be taking any medication at age 50. And by the time you're 71, you might be on, cholesterol medicine, or maybe you have high blood pressure. Who knows what could happen in 21 years. But the other thing that happens in term insurance is you don't have access to the cash, right? Because it's term insurance. It's kind of like car insurance. You pay for it, you have it. If you don't pay for it, you don't have it. And you won't be covered in life insurance anymore because unless, of course, you pay for the additional amount that would be. And like I said, by the time you're 71, that cost could triple or quadruple for you. And it could be much harder for you to get coverage, and it definitely will cost you more. So the next question is, or the next definition is on permanent insurance. Do you want to take it from here, Allie?
Yeah, so this is going to be our permanent insurance umbrella, which is exactly what it sounds like. It's supposed to cover you for life, permanent life insurance. And so what would it look like to have access to some cash value and also have a death benefit? That's what permanent life insurance provides for you. And so there's different kinds of permanent life insurance. There's whole life, there's variable universal life, index universal life, which is Holly and I's favorite type of permanent life insurance. All of these generate some type of tax-free income that you can utilize for different purposes. It could be you using it in retirement, which is what we're going to talk about today. However, there's been many different businesses that they weren't able to get funding from banks or loans, and they had permanent life insurance. Holly, can you give me an example of one of those?
Yeah, so Walt Disney, whenever he first had the idea for Disneyland, he went to several banks and they did not like his idea of a little mouse having these imaginary kingdoms and all that kind of stuff. So what did he do? He went to his permanent life insurance and took money out of that to fund his idea. And what a great investment he made, I would say. Another person that comes to mind is Ray Kroc. He's the founder of McDonald's. And also the person who founded J.C. Penney's, he also took money out during the recession in order to keep J.C. Penney's alive. And if they're still going today, I do see them in some of the malls when I'm traveling. I don't know if there's any in California anymore, but I definitely know that they're still out there, and you can still get some really nice options as far as clothing and jewelry and household goods, kind of the Amazon of brick and mortar still. So yeah, you can definitely look at those examples from the past. And I'm sure there's many examples for the present time. I know for us personally, we've used our permanent life insurance for college funding when we went to go look at schools for Adrian, and for other things that we've had expenses on and we needed to take some money out. So one of the great things about the term insurance and the permanent insurance that we offer is something called living benefits. I'm sure you've heard us talk about you don't have to die to use your life insurance anymore. This isn't your grandpa's policy. Well, for example, if you have a face amount of $250,000 and you were to get a terminal illness at age 50, you would be able to take out $213,733. Now, most people may or may not take out the full amount, but they have the option to do that. If you were to get a chronic illness, if you're not able to do the 2 out of the 6 daily functions for living. So that's bathing, dressing, eating, toileting, transferring, or incontinence. Then you would be able to get a certain percentage. In this case, it looks like 2%, or a little bit more if you're older when that happens. Again, I talk about this all the time because my parents were not prepared for the death of my father or my mom's critical illness that she had most of her adult life. And so the final one is critical illness or injury. And that is, heart attack, stroke, cancer, kidney disease, ALS, blindness, loss of limb, brain injury, and there's several more. There's 16 different triggers for critical illness or injury, and that depends on the severity. So, people that have had like stage 1 cancer, they may or may not qualify for living benefits. However, if they were to get diagnosed with stage 3 or 4, they definitely would qualify for that, especially if it's life-threatening, they would be offered a higher amount. Anything else you
Yeah.
want to add on living benefits?
Yeah, also a newer benefit that came out about a year ago was the Alzheimer's cognitive impairment, so including Lewy body dementia. And so we can see that, Alzheimer's is on the rise. They're calling it type 3 diabetes. And so it could, depending on the company. So here we're talking about specifically National Life Group's living benefits, but if you shop different life insurance, you're going to see that their living benefits, if they have any, are a little bit different depending on where you go. So for like terminal illness, it may cover you for 12 months or less to live instead of 24 months. They don't always have the critical or the chronic illness. I see critical illness pretty regularly for living benefits. So you have to look at the defining qualifications for the living benefits life insurance, because not all living benefits, or accelerated benefits is another term they use, are the same across the board for all providers.
Yeah, all benefits are not created equal. So you definitely want to make sure that each policy that you're looking to have, has those different benefits, because you want to make sure you can take advantage of it. And another rider that was announced about the same time as the Alzheimer rider is the fertility treatment. And so this doesn't necessarily accelerate any of your benefits, but if you do have cash value in your policy, you can use that for your fertility treatments as well, which tend to be very pricey and very expensive. So the next question is, what is the best type of life insurance for your family? Is that term or is it permanent? And really only you can answer that. There's different thoughts about term and permanent insurance. For me personally, I have both. And the reason why I have both is because if I were to get sick during my career, and I am a business owner, so I would want to use my term policy for those living benefits first, so I can keep my permanent policy in place, because I have quite a bit of cash value built up, and I'd want to keep that in place for that lifetime income that we were talking about. The term policy that I have in place will be in place until about the time that I hit retirement. So, those are just some different strategies. It really just depends. Term provides coverage for a preset of time. Once that term expires, you have to requalify for coverage, and it only retains value if living benefits are used while covered by the term. The permanent provides coverage for a lifetime. Of course, you have to pay for it for much longer, typically than you would your term. If you had a 15-year or 20-year term, permanent insurance, you want to pay into longer, so you remain having those benefits in place.
Or just more.
Or just more benefits in place.
Or you could pay more if you wanted to only pay for 15 years, but instead of having a 15-year term, you would just put in more money for those 15 years. So cost is the biggest difference. Like why someone would go with term maybe instead of permanent is if they couldn't afford to really fund the life insurance properly, and they're really just looking for some type of coverage that's inexpensive. maybe they're stretched on their budget or something like that, term is a little bit more of affordable option to just have coverage.
And another great thing about the company that we're talking about and their life insurance policy, if you do start off with a term, you do have a certain period of time, depending on how many years you have that term for, in order to convert it to permanent. So you still have to do a questionnaire and everything, but it's not a full application. So you're able to take that term policy. Like if you have a 20-year term policy for the first 15 years, you can convert that over to a permanent policy. So it's a great benefit. You just want, again, read the fine print or talk to the person who's helping you sign up for it to make sure that it has those benefits in place. Now, kids policy. Why in the world would you want to have life insurance policy on your kids? Well, we do have life insurance policies on our phone because if we happen to drop them and break them, we need to make sure that we can replace them. Same thing for our kids. If something were to happen to them, I have one of my good friends, her son, when he was 8, he had a brain aneurysm. He did not die from it, thankfully. However, he did have several surgeries. He was in the hospital for quite a while. And, she didn't at the time have something in place where she could access that benefit in order to, take more time off of work or whatever the case might be. Now, this is also a great way for you to save money for your kids to go to college. This is what my son has in place. He's 12 now. He got it when he was 17 days old, and he is able to use that cash value for college or trade school, or maybe he wants to start a business or he wants to put a down payment on a home. All of these are great things to do with this kind of policy that aren't available through some of the different types of college planning that's out there. Anything else you want to add to that, Allie?
I would just like to add, as medical technologies advance, that means that people are getting diagnosed with things sooner. And so people look at me weird when I bring up having life insurance for their kids. However, I have had countless kids be denied life insurance for different things, and including autism, which unfortunately is something that you may not be approved for life insurance, or you may have to get a specific kind of life insurance for your kids with autism. And so you've got I think it's 15 days after a baby is born that you can get life insurance. They've got to have a social security number, and then just do it so they've got coverage for the rest of their life.
Absolutely. You never know what could come up in their childhood or in their young adult life that would make them ineligible. And I have had that happen as well. Term benefits. So again, for term, you would have coverage for your family, assets, and legacy. You do have the living benefits that are available. You have the conversion privilege to upgrade to a permanent policy, and you have instantaneously increases your net worth and protects your financial assets. However, on the other side, the permanent benefit has a little bit more because you're able to have some cash value building, and you have coverage for as long as you live, and it also grows without losing any money in the market. So it's a great strategy for tax-free guaranteed income for you as well. So which policy is best for you, Allie?
Both. I want it all. A, B, C, D, E, F, G.
We always talk about this as life insurance agents, right? Like, which policy do you have? Well, I have both. And most of the people on my team have both because of that, because of the reason that I mentioned. But Allie, go ahead.
Yeah, I started and I got term, and Dylan and I have for the last 8 months been talking about having IULs as well, permanent life insurance, and we just haven't sat down together to actually do it. But that is happening by the end of this year. So I will have both as well. It's definitely, we see the value in having both. And, I have been contributing to a Roth IRA and term. But the cool thing about Index Universal Life is that it's kind of like a Roth IRA on steroids. So, except the cash value, I have a lot more flexibility to use for what I want, rather than if I were to want to use those funds for my Roth IRA right now, then I would be penalized for being under 59 and a half, utilizing those funds, but I don't have those penalties using the cash value in permanent life insurance. So that's the value that I see in permanent life insurance.
Absolutely. And the fact that you're young and healthy, it's the best time for you to take advantage of those benefits. So if you need any help with that, you just let me know. Just kidding. All right. Well, thanks for joining us today on which policy is best for you. Remember, it is Life Insurance Awareness Month. And if you don't have life insurance of some sort and you have insurance on your phone, make sure that you're taking care of yourself and your family as well. And even if you're single, that doesn't mean that there's not going to be any debt when you pass away. So even if you're single and you don't have a family yet, maybe you're younger. I have lots of stories, and you can see that on my stories on Instagram or on Facebook. I have lots of videos about people who were young that got life insurance before they were married, and they had to take advantage of those living benefits. So you never know what could be thrown your way, whether it's an illness or an accident or something like that, where the living benefits could provide the help you need to get through that situation. So make sure you take a look at that, especially during Life Insurance Awareness Month. It's a great time for you to find out more. And you can do that by, messaging us or putting something in the chat, and we'll be sure to reach out to you.
Okay.
Bye.